Hey everyone, over the last few quarters there has been a massive correction in small finance sector of India with Utkarsh small finance correcting 64%, Equitas, Ujjivan and Suryoday small finance down by 50% and AU small finance correcting the least by around 26%. The question is, what went wrong? Moreover, the bigger question is, will the pain continue or the worst is over? So I did a detailed analysis on last 4 quarters of performance of small finance companies of India and identified the reason for this massive correction. Plus, I studied the financial data and management guidance to understand what can be the expectation in the near to mid-term from small finance bank. But before that, let's get a basic understanding of business model of small finance bank and its roller coaster journey post-COVID. Towards the end, I've also done a comparative analysis of all 5 small finance bank on important KPIs. That would help us understand the best performing small finance bank. And then we'll look at the way ahead for these small finance banks. Alright, let's get started. Before we get into the reason for correction, it's important to understand how small finance companies operate. So as the name suggests, small finance companies provide lending facility. But the key difference between a small finance bank and a universal bank is small finance banks are focused on financial inclusion. So they mainly serve small businesses, low income group and unbanked individuals. In fact, RBI has mandated that 75% of small finance lending should be towards the priority sector. That include lending towards agriculture related loans, microfinance loan to low income individual, MSME lending, affordable housing, education loan for weaker section of society and so on. In fact, the entire idea behind providing a small finance banking license was to provide a credit facility to the underserved people of the country whose loan application get rejected by large universal bank in many cases. And if Indian economy has to grow, the priority sector should get lending support. Because even today, 40 to 45% people in India fall under weaker section of society. That include your small farmers, self-employed people with small shop and so on. Overall, 60 to 70% of population of India falls under priority sector lending in some form. But there's a catch. Lending can be divided into 2 categories, secured lending and unsecured lending. And that is the most crucial aspect of small finance banking model. For example, an affordable housing loan or a vehicle loan would fall under secured lending, where the house or 2-wheeler, 4-wheeler is the collateral. So in case the person fails to pay the loan, bank can seize the property or the vehicle and auction it. However, categories like microfinance lending falls under unsecured lending where there is no collateral. And that creates a risk of NPA for small finance banks in case of failure of loan repayment. Here, please understand that if there is a failure of loan repayment, the bank not only loses its interest payment, but also loses the principal amount. And that creates a massive dent in its profitability. But on the other side, while interest rates on secured loans are around 13-14%, unsecured lending interest rates are between 20 to 25%. Now obviously, when the time is good, when economy is doing well, when people are able to repay the loans, unsecured lending results in massive profit for small finance banks. However, when the situation turn around, when the economy struggle, when people are unable to repay the loans, it becomes a nightmare for banks to recover their money for unsecured lending. Also, the lending growth slows down significantly because banks are under pressure of bad asset quality. And that puts a massive dent in the profitability of small finance bank as well as their growth prospects. However, it all depends upon how much exposure that small finance bank has on its balance sheet. Just hold on to this, we'll come back on secured versus unsecured book breakup of each small finance bank. For now, let's first have a quick look at the journey of small finance bank in last few years and the share price movement, because that would help you understand the business cycle of these companies. Friends, before we move ahead with the video, I always say that the best investment you can do is improving your skills. Today, people with skill sets like data analysis, personal branding, business strategy, content creation and AI are fetching excellent pay scale. As people have already seen layoffs in 2024 and still see in 2025, so now they are learning these skills by paying more than lakh of rupees. But unfortunately, many people are still not getting results. What if I tell you you can learn all these skills for free, that too in 180 minutes? Interesting, right? Yes, it's possible. because there's an exclusive training session link I provided in the description which cost around 15,000 but completely free for my audience, and it teaches all high demanding skills like data analysis, personal branding, content creation, business strategy, and even resume building and job hunting strategies and salary hike strategies with help of AI. And this is for all the working professionals, whether you are in tech, non-tech, or even entrepreneur and founders. This session is conducted by top pioneers who are expert in AI. People who are updating themselves in AI are in top 5%, but those who are not are now way behind the market. Here are the articles I'm presenting on screen which can shock you and why AI is very important skills for you. It's never too late for this training session. It's just a matter of 180 minutes. So if you're interested, check out the link in the description. Moving on to small finance bank's journey, what happened is COVID resulted in lockdowns and fall in business activities. That resulted in rise in NPAs as many people failed to repay the loan. That badly impacted the profitability of all small finance banks. Ujjivan net profit crashed badly from 350 crore to 8 crore and then minus 415 crore. Utkarsh small finance also witnessed massive fall from 187 crore to 61 crore. Suryoday small finance went down from 111 crore to 12 and then minus 93 crore. Although Equitas net profit fall was not that bad, it was down around 27%, and AU Small Finance was the best performer with flattish profit growth. This got reflected in the share price as well. Ujjivan share price tanked from 41 rupee to 14 rupee. Suryoday tanked from IPO price of 300 rupee to below 80 rupee. Equitas fell down from 66 rupee to 38 rupee. Utkarsh was not listed that time, it got listed in July 23. But AU Small Finance share price was the strongest. It did not fall but consolidated for 2 years between March 21 to 23. During this correction phase, small finance banks cleaned up their NPAs, and then the economy started witnessing a strong growth. As a result, small finance companies also started aggressive lending. Hence, eventually all small finance companies reported massive growth in numbers. Ujjivan net profit zoomed from minus 415 crore to 1280 crore. Utkarsh profit zoomed from 61 crore to 500 crore. Suryoday profit zoomed from minus 93 crore to 216 crore. Equitas profit jumped from 280 crore to 800 crore. AU profit jumped from 1130 crore to 1500 plus crore. So it looked like everything was great for the economy and small finance banks were growing leaps and bounds. However, the problem with this industry is it's deeply cyclical. When there's good time in the economy, small finance banks increase their lending aggressively. But aggressive lending eventually results in NPAs. And this time the problem occurred in the microfinance sector of India. During the growth phase, small finance banks along with microfinance NBFCs did aggressive lending and distributed microfinance loans at very fast rate. This obviously resulted in sharp profits, but it created a big mess. Low income people and small vendors ended up taking multiple loans from different NBFCs and small finance banks. On top of this, there were many small fintech lenders that provided loan via the app. So there was a situation where one person ended up with 2-3 loans, and it eventually resulted in a state where many people started defaulting on loan repayment. I was reading Equitas con call where they highlighted one more reason, that earlier there was a cap that all lenders put together microfinance loan cannot exceed 1.25 lakh rupee. This got increased to 2.25 lakh. Because of this change, the actual amount borrowed by the customer had gone up probably at a pace which was too rapid. As a result, microfinance specific NBFCs that zoomed exponentially also tanked 70-80%. Since small finance banks also have some level of exposure to microfinance loans, they also faced rise in NPA and provisioning, and that resulted in sharp fall in small finance companies. But here if you notice, EU small finance did not fall badly. Utkarsh is the worst hit small finance bank, and remaining Equitas, Ujjivan and Suryoday have corrected around 50% each. Now what explains this variation in correction? The answer is exposure to secured and unsecured lending. If you recall, we earlier discussed that unsecured lending can result in high profits during good time, but it can create a nightmare during difficult phase. So if you look at Utkarsh, in December 22, company had 72% exposure in unsecured lending and only 28% exposure in secured lending. By December 23, secured lending increased to 35%. Still, unsecured lending was 65%, and that was the biggest culprit. Since Utkarsh had a very high exposure in unsecured lending, it resulted in sharp rise in company's NPA in last few quarters. As a result, net profit growth tanked to negative in latest December quarter, and hence its share price got hit the most. Today, unsecured lending exposure for Utkarsh has reduced to 59% and secured lending is at 41%, but still on the lower side. Then if you look at Ujjivan, it also has high exposure of 61% unsecured loan and 39% secured loan. Last year, December, unsecured loan exposure was 72%. So again, the exposure of unsecured loan has reduced over time, but is still very high. And that again resulted in sharp spike in NPAs, consistent fall in net profits in last 4 quarters, and hence its share price tanked 50%. Suryoday is also trying to transition from unsecured lending to secured lending, that has moved from 33% secured lending in FY22 to 41% in FY24. Still 59% was unsecured lending, and FY25 estimates are to increase secured lending to 48%. But since unsecured lending still has very high contribution, Suryoday also witnessed sharp increase in NPA and fall in net profits, and hence its share price tanked 50%. Then Equitas has a much higher secured loan book of 86%. Unsecured book is just 14%. Due to that, the asset quality of Equitas has not deteriorated badly, but the stock still tanked 50%. The key reason was in Q1 of FY25, Equitas increased its provision coverage ratio from 55% to 70%. This was done to adhere to RBI guideline that mentioned any small finance bank that want to convert into a universal bank should have net NPA of below 1%. And Equitas NPA was slightly higher. So Equitas increased the provision and impacted the net profit sharply. But next quarter, they again sharply increased the provisions against the microfinance lending, and hence profit tanked again. Among all small finance banks, AU Small Finance was the one that got hit the least because it has 90% exposure in secured lending. Hence, it faced lowest volatility in business. Net profit also did not tank much and as compared to other small finance bank, and share price also fell the least. Now let us do a quick comparison of all these 5 small finance banks and understand which is the best performer. Let's first start with the deposit KPI. And here if you look at it, AU has got the biggest deposit, followed with Equitas, then Ujjivan, Utkarsh, and then Suryoday. Here the important KPI is what is the growth in deposit on quarter basis. And here if you look at it, AU was showing excellent growth, but here the catch is because it acquired a company Fincare, because of which the growth is very high. But if you look at it in Q3, the growth is just 2.34% in deposit. And this is a problem with all small finance bank where the deposit growth has reduced in all banks. In fact, the problem is not just with the small finance bank, it's the problem with the entire financial sector, be it your private banks and be it your small finance bank. So deposit growth is one key challenge this industry is facing, and one of the reason why there's a negativity around this. Hopefully this trend would change going forward. So very important KPI to track how is the deposit growth, which is not looking good at this point in time. Next is the advances growth, which is the loan book. Again, your AU is the largest, followed with Equitas, Ujjivan in terms of absolute number. But here the important KPI is the advances growth, where if you look at AU Small Finance Bank, if you just ignore this is because of the acquisition, but it is growing at more than 5% rate quarter on quarter, right? And if you look at Equitas, the growth is okay. It fell down significantly in Q1, but then it is 3%, 3.58%. Ujjivan, Utkarsh, the growth in advances has fallen drastically. Look at this, Ujjivan was 7% in Q4, and then from here it is less than 1%. Likewise, Utkarsh was 11%, and now the reason is because all three of them have very high exposure in unsecured lending, and because we are going through a difficult time in small finance bank in unsecured lending, they are not giving the loans aggressively. In fact, they have degrown their microfinance book, and the reason why AU and Equitas have done reasonably well, in fact AU has done the best because it has got 90% secured loan book, Equitas has got 86% secured loan book. Moving on, the asset quality, very important KPI, gross NPA and net NPA, there's a clear trend where especially your Ujjivan, Utkarsh, Suryoday have shown a significant jump in their gross NPA. Look at this, Suryoday, Utkarsh again, and then Ujjivan also. Whereas your AU and Equitas were able to maintain the asset quality. If you look at the net NPA, again the same story, Ujjivan, Utkarsh, Suryoday, significant rise in net NPA, which is not a good sign. And the reason is again same, because they have very high exposure in unsecured lending, and that is going through a difficult phase, right? Ujjivan was able to maintain the asset quality at 0.6%, Equitas below 1%, and AU, so all three, AU, Equitas, Ujjivan are still able to maintain an asset quality which is an NPA of, net NPA of less than 1%. But then a clear trend where your Utkarsh and Suryoday NPA has increased significantly. Then next KPI is the cost of fund. Again, a very important KPI that suggests what rate at which these small finance banks are raising money. Right, so here a simple rule that the best pedigree of a small finance bank, or for that matter any financial company, would have the lowest cost of fund. And you can clearly see AU has got the lowest fund, which means AU has got the best pedigree, and the reason is because 90% of the loans are secured. Followed with Equitas, which is at 7.49%. Ujjivan is still okay at 7.6%, and Utkarsh, Suryoday have got slightly higher cost of fund. In fact, there's an increase in trend for the cost of fund, which is again not a good sign, right? And the reason why, because the industry is struggling and the cost of fund has also increased, right? So the KPIs clearly suggest that there's a lot of pain in the industry, especially the ones that are doing a lot of unsecured lending. Next important parameter is the net interest margin, which is the interest which they are earning, right? So AU Small Finance, if you look at it, last year same quarter, obviously if you look at it, AU is only doing a NIM of 5.5%, whereas your Ujjivan, Utkarsh, Suryoday are doing such high net interest margin. The reason is simple, because they have high exposure in your microfinance and unsecured lending, which is a high margin business, whereas AU has got secured lending, which is a low margin business. But the good thing is that it is able to maintain this margin, and the reason why its net profit is also not fallen drastically, it is consistent. And the biggest reason why AU always command a premium, because it's got a very stable asset quality, its margins are not very volatile, cost of fund is low, and its profit do not get very volatile in difficult times. Equitas net margins are still decent at 7%. There's not much change, but look at this. Ujjivan, Utkarsh, Suryoday. Ujjivan margins have fallen from 9.4% to 8.6%, and look at this. Utkarsh, consistent fall from 9.9 to 9.4, 8.8, 8.3. Margins are falling, and going forward, these small finance banks want to focus towards secured lending, which is a low margin business. So there should be a trend where the net interest margin reduces further. Same story with Suryoday also. And because of increase in NPA and the asset quality issues, there has been a significant volatility, especially with your Ujjivan, Utkarsh, Suryoday, where there's a sharp fall. In fact, Utkarsh has posted loss in latest quarter. So Q3 was worse so far. We have to see how Q4 pan out, but definitely there's a lot of pain. Equitas, we have discussed, there was a sharp fall from 208 to 26 and then 13, but there's already a recovery to 66, and I expect that going forward it should further recover. But then Ujjivan is still going down, and Utkarsh, Suryoday are still going down. Let's see, maybe 1 or 2 quarter of underperformance, but this is something very, very important to track. Next important KPIs is ROE and ROA, and same trend that is happening, where the ROE and ROA for all these small finance banks except for AU, it is showing a good resilience. But otherwise, although Equitas, if you look at it, it fell down badly and then from there it has recovered. I expect it to recover further. But look at this, Utkarsh ROE is now minus. So look at this, from 16.9% to now minus 21. Look how volatile it is. Suryoday also was doing very good at 15%, which has now fallen to 10%. Then if you look at the ROE, same story, right? And finally, so one trend is very clear, that the business is facing a lot of headwind, right? But then how's the valuation, whether it has discounted it or not? So if you look at AU Small Finance, it is trading at a price to book of 2.9. Here the P is not that important. Price to book is most important. Against the median, 3-year median is 5.2. So it is trading at a 44% discount to median P of 3 years. Equitas is currently trading at a price to book of 1.06 against median of 1.8. So 41% discount to median valuation. Ujjivan is trading at 1.1 against 1.7 median, so 35% discount. Utkarsh is also trading at 42% discount to median valuation, and Suryoday also trading at. So one thing is very clear, that market has already given a good discount to these small finance bank, because at this point in time, nobody is interested in them. But then the good point is, when there will be a recovery, since they are trading at a very low valuation, they should kind of see a good increase in the share price. But then when will that time be? That is something we have to wait and watch. Now let us discuss whether the worst is over for these banks or not. Based on my analysis, it looks like there's still some pain left in microfinance segment, and I expect Q4 to also remain weak. However, FY26 should see recovery in small microfinance segment and overall small finance bank. And please note that market is always forward looking. For instance, Equitas net profit tanked badly in Q1 of FY25. It was actually April to June 24 results that got declared in July 24 month. However, its share price peaked out before results by 20th June. By the time results were declared, stock was already down 20%. Suryoday reported weak number in last 2 quarters, but share price peaked out by May 24. Likewise, Ujjivan also peaked out before the weak results started publishing. Basically, market always discount the future news. So just like the stock price of these small finance banks peaked out and started correcting before the bad news came out, these stocks would start recovering before these companies would start posting good news. And considering the current valuation of these small finance banks after the sharp fall, it looks like a good amount of negative news is already priced by this time. If you look at individual valuation, Equitas today is trading at a price to book of near 1, which is even lower than COVID period valuation. Ujjivan price to book is also near COVID lows of 1. Suryoday price to book is again near COVID lows of 0.5. AU price to book is also the lowest since the data available. Plus recently there is a positive news from RBI. So in November 23, RBI increased risk weight for microfinance loan to 125%, requiring banks to hold more capital against these loans. This led to reduced lending capacity and slowed loan growth in microfinance sector. In February 2025, that is last month, the RBI reversed this decision, reducing risk weight back to 100%. This move aimed to ease capital requirement and encourage lending. Plus, there are chances of interest rate cuts in coming months. So that should augur well for lending growth. In any case, it looks like we are near the bottom for small finance sector, provided microfinance situation does not get worse from here. Although Q4 would still be painful. But one thing you should remember before investing your money is secured versus unsecured loan book. Secured loan book might not fetch high interest, but it is less risky, and that is what is shown by AU Small Finance Bank. And as far as long-term picture is concerned, I still believe that priority lending would be a very important part of our economic growth. And considering the massive population, there is ample scope for growth. However, these small finance banks have to consistently reduce their unsecured lending to manage the risk. And last thing I would say is, small finance sector would remain a highly volatile sector due to their riskier business model and risk of RBI regulations. Plus, competition from fintech companies would continue to pose challenges. Having said this, companies that would have a better credit underwriting process would continue to do well in the long run. Now tell me in the comments, what is your take on small finance bank? Are you invested in any of the companies? And do you think we are near the bottom or there is more pain ahead? For more details on AI workshop, check out the link in the pinned comment. And if you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.